Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about IFB Industries and Whirlpool, which is a better company, and let's have a comparison between the two. So, let's get started. First, all a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about this comparison, here's a small request. Kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on short-term, long-term market calls. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, contact me on email and probably we can work things out with the fee. And also, if you cannot pay on Patreon, you can join me on YouTube with the join button, and you get all the benefits of Patreon on YouTube as well. Now about this industry of Whirlpool and IFB, post-pandemic demand is coming back into the industry. It is proving to be an attractive sector to invest because most of the companies are struggling, and the main reason for that is, especially for something like a Whirlpool or AC companies or white goods companies, is that the major amount of sales happen between March and September, especially in the summer season. And summer season has been totally mauled up over the last 2 years because of the pandemic. So this time around, it seems like things will be much different and things will be very positive. So home improvement is a long-term story and it has been growing. And remember that when housing, people are talking about housing and the housing sector to do well, real estate to do well, I think all these ancillary plays will also continue to perform extremely well. Modular kitchens, a necessity as usage have increased, and in those modular kitchens, you will require equipments. Plus, in the washing area, so washing machines, you have microwaves, you have dishwashers, you name it, and you will require all those kind of products when you're building a tailor-made house for the urban people. So it is set to grow even further once things completely open up and normalize. So from FY23 onwards, we believe that things will look even better. And second and third tier cities are set to do well because there is more demand there with people earning better and people getting into online businesses. They are earning much better, and we are looking at a scenario where the demand will come in from that region or geography. If you look at the comparison, then the market cap of IFB Industries is extremely less at 4,600 crores. It's a small cap company, whereas Whirlpool currently is around 26,000 crores. Operating profit margin slightly better in Whirlpool. A return on equity of around 13% in Whirlpool is pretty good. Both are trading at very interesting levels, not extremely expensive. I won't say Whirlpool is cheap, but not expensive at all when you look at some of the companies trading at 30, 40, 50 times sales. Uh, Whirlpool is trading at around 4 times sales. IFP is trading at around 1.7 times FY22 sales. If you look at institution holding, then there is around 10% institution holding in you can IFB, whereas around 15% or so institutional holding is with Whirlpool. Whirlpool is a bigger brand and a renowned brand, especially in the washing machine segment, so it had to do extremely well in terms of market cap, etc., and the way people have invested. But Whirlpool has been a drag for investors over the last year and a half, with the stock meandering between 2000 and 2600 and currently at the lower end of things. If you look at return on capital employed, then again Whirlpool beats IFB. IFB is up around 4.8x over the last 12 months. If you look at the peak, Whirlpool is up only 7% in the last 1 year, and that is why something like a Whirlpool looks extremely attractive at these levels. It cannot be that the company or the stock just goes through you can say 12 months, 18 months of phase without any movement. So this could really break out once things normalize, and one or two good quarters come in. This could really break out into something very interesting over a 6 to 8 months period. Good promoter holding in both the stocks. The PE, as expected for Whirlpool, has come down because earnings have grown. Although earnings have not grown at 30-40%, but earnings are growing at 20-25%. So the PE, so earnings have come out to be around 50-55 rupees. Yes, I agree that in FY18 the earning was close to 50 rupees. It is back where it was. So that's why over the last 3 years, with the earnings do not moving at all, the stock hasn't moved, but the PE has dropped. So it's around 40. IFB has a PE of around 78-80, and that's where I think Whirlpool looks very good to me at these levels. 52-week high for Whirlpool is 2780, for IFB is 1500. Both are down around 30% from their 52-week highs at the moment. So basically, both the companies are off 52-week highs, as I explained. Valuations are stretched in both cases, and numbers are subdued. But you need to understand that comparatively, Whirlpool is doing okay, and the valuations have come down around 2000 2100. I would say it is a very good buy from a 1 2 year perspective. Yes, it has not performed for the last 18 months, but it doesn't mean that it will not perform for the next 18 months as well. Potential upside look much better in Whirlpool. In fact, margin of safety is much greater in a Whirlpool, a larger company, a sort of a larger small cap company. Could be considered as a mid cap compared to an IFB, where the movement could be even more volatile in nature. So potential upside look more in Whirlpool. Heavy competition mean both may struggle. So there is extreme competition from other companies as well. There are new companies, or segments of new companies getting into smart appliances, etc. So those could do well. Something like an Acrescel, Somani Home. So the competition is getting tougher, and with summer season, things will get extremely interesting and competitive. With this time around, hoping that the business will pick up big time, and the pandemic stays away. So IFB is big in dishwashers, while Whirlpool is big in washing machines, and both are doing well in their, you can say, most pedigree segments. So both are decent firms. My call is that Whirlpool looks more attractive in terms of upside potential, but remember that numbers have to come in for both the companies to perform. Hopefully, numbers will kick in from FY23 onwards, so you can accumulate over a period of next 3 months into these stocks, especially something like a Whirlpool between 1950 to 2100 in that region. And if you have IFB from lower levels, because it has gone up a lot over the last 2 3 years, so if you have it from 800 900 levels, keep holding it. It should go past 1500 as well going forward, and have less than 10% exposure into such stocks. So this was a video on the comparison between Whirlpool and IFB. Please do like and subscribe to my channel. Hit the bell icon so you can get my videos straight away when I post it, and kindly do support me on Patreon or YouTube.